Consumer confidence is showing us it might not be that cheerful of a holiday shopping season. It is Tuesday, November the 25th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, share it with friends, family, or colleagues. But we're here today to report on some of the economic data that we've received. Now, we came earlier and talked about the retail sales report, but remember that was from the month of September because that is a government-issued report. We're able to get some of these private reports for confidence, and we did get the November reading for consumer confidence. It's telling a different story than what we saw in retail sales. In fact, it came in much weaker than expected. And it was if you look at the expectations component, which we like to look at to give us an idea of future spending, because typically if you're concerned about the expectations of your income, of the economy, you're not going to buy big ticket items. You're going to pull back on some spending. We did see that decline. It's actually sitting at the lowest level. Aside from the drop we saw in April, it's the lowest level since 2013. Now, inflation expectations, they were relatively unchanged. That's a good thing. You did see a slight tick higher in the median expectation for inflation over the next 12 months to 4.8%, and that was up from 4.6%. Again, it's not moving significantly, but that does still tell us that inflation is a concern amongst investors. When you look at the labor differential, and this is something the Fed will be looking at, if you look at the jobs that are plentiful in the economy, so that's what consumers think, or there are a lot of jobs out there for you to get, minus the consumers that think there's jobs hard to get. That's called the jobs plentiful minus jobs hard to get index. That actually declined, and that's been hovering now since the lowest level we've seen since the pandemic. So job prospects are weakening, and that could have an impact on what we're seeing in the consumer confidence data. Now, to wrap this up on the consumer today, what we saw was September data very lagged because of the shutdown. We are seeing some softening there. Consumer confidence keeps just falling off a cliff. This is likely going to lead the Fed to cut interest rates in December. We saw the expectations of that interest rate cut jump up to over 80%. And we've seen the equities like that news, that a softer economy means lower interest rates and maybe can refuel the economy going into 2026. That's all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.